The declaration of El Nino by the Bureau of Meteorology this week is expected to stop Australia's record run of agricultural production. The drier conditions will cause crop production to fall, and at the same time, prices for most agricultural commodities are expected to ease from their recent highs. I caught up with Dr. Jared Greenville, the Executive Director of ABARES, that's the Australian Bureau of Agricultural and Resource Economics and Sciences, a little earlier.
Yeah, so these wet and weather patterns really present a drying outlook for Australian agriculture, and both the El Nino and the positive Indian Ocean dipole means that it's going to be quite widespread. So generally they're associated with lower rainfall, higher temperatures, and given that we've got both of them at the same time, that'll affect agricultural regions from across WA all the way across to the eastern seaboard into Queensland, New South Wales, Victoria, Tasmania, South Australia. So it's really a widespread picture of drying conditions and warmer temperatures. For the cropping and for the rest of this cropping season, there's also, ironically, a greater chance of frost events later in the season, which can impact when grain's starting to form.
And just talk about how these dry weather, how far away could a drought declaration be? Are we talking years away or?
Oh, it's all very hard. So, you know, the outlook is for drier conditions. Whether or not that turns into what we'd term drought conditions is really a wait and see. And drought is also very hard to, I guess, call in the sense that it's a very slow moving event. We have a period of dry that continues to build up. Also, it depends on how farmers are situated at the moment. And so we know that farms will experience drought in many different ways. And from a financial perspective, some might be well managed, be able to well manage the dry conditions, and others won't be, and they'll experience kind of the financial hardship and the like. So it's a bit hard to tell, but what we do know is that often, you know, periods of wet, which we've had, and we've had 3 exceptional seasons, are often followed by periods of dry. And that's where we're flicking into. And so we don't get this transition between, you know, wet to average to dry. It seems to go wet to dry.
Yeah, well, you mentioned we've just had 3 good seasons. Just contextually, how strong has agricultural production really been over those past few years with all of that wet weather that we've had across Australia?
Yeah, we've broken records really those last 3 years in a row. And so we saw agricultural production go all the way up, if we include fisheries and forestry, to $98 billion last year. And coming out of the last dry period, we were down at about $60 to $66 billion. So that gives you a big kind of picture of like how big the sector got during these good periods. And we're expecting that to start to come off with these drier periods. But still, given that the dry is starting to settle in now, and it's been around for a little bit in some parts of the country, we're expecting the sector to hit about $80 billion, which is still the 3rd highest on record. But it certainly is a fall from what we saw last year.
Okay, so the hot weather is starting to make a bit of an impact, but I think it's also coming at a time when commodity prices are also starting to ease off. So what's your forecasts for agricultural commodities in the 12 months ahead?
Yeah, so we're seeing now this drying event and also fall off in global prices. And so those 2 things are happening at the same time. And so looking across the different sectors, for our cropping sector, we're expecting that the level of production to fall by about 34% for our winter crop and down to about 45 million tonnes. At the same time, we're seeing global prices start to dissipate from their really high levels that were generated from the war in Ukraine. And also, when we were having wet conditions, a number of major producers, particularly in the Northern Hemisphere, were experiencing drought and very dry conditions. And that led to really a fall in global supply of grains. Those things are starting to correct themselves just as we're starting to experience this dry. So that will see the sector value fall by about 20%. For livestock, we're also now starting to see what we're seeing, I guess, a confluence of high production because we've had these 3 good years and the national herd and flock have really rebuilt to levels that we saw prior to the last kind of dry period. And that's led to increased production. But at the same time, that increased production means lower prices, and with drier conditions, there's greater incentive for particularly, you know, sheep producers, but also cattle producers to start to increase that turn-off. And so we're seeing overall that sow yard prices, particularly for lamb, to be about 40% below what they were last year, and also for sale yard prices for cattle starting to fall back about 35% or so forth from where they were last year. So those effects are combining to give us that fall in overall agriculture production value. The only standout, I guess, would be the horticulture sector, where we're expecting some growth by about $1 billion this year. And that's on the back of really high water storages that we've got across much of southeast Australia, in response to those 3 years of good rainfall, and that should provide a buffer for this year coming into the production period.
Yeah, you mentioned horticulture. So is that a reference to grape crops and things like that are potentially going to be doing better over the next 12 months?
Yeah, we've got across our kind of fruit irrigated crops. Also, that'll extend into some irrigated cotton. But for grapes in particular, we've had wet conditions, which has increased the disease load and so forth and makes it harder to manage. And that's depressed production over the last year. Now with dry conditions and plenty of water and water being relatively cheap, we're expecting to see that production to go up. But that'll be the same across a whole suite of fruits and vegetables and the like, as we've got water available and good growing conditions, and that will lead to an increase in production, including into nuts and other products like that.
One other thing farmers and all Australians really have been dealing with is higher diesel and petrol prices, and it looks like fertilizer prices are still very strong. So is this just another big hurdle the farm sector is going to need to overcome over the next 12 months?
Yeah, we're starting to see that kind of price cost squeeze affect the sector more than it has. So it's been buffeted by high international prices so far. As these come up and, as you say, input prices remain high, they have come back. So fertilizer prices certainly have come back from the highs that we saw generated also out of the war in Ukraine. But they still remain high, and diesel prices have been really persistently high over the period, and they haven't really fallen back. And so that's starting to squeeze some of the, farm cash incomes and farm profits. And the other factor in that has also been the rising interest rates. And so for those producers which are holding debt, their interest repayments have gone up quite a lot, as per, we all know from our own household experiences. And that will start to squeeze what has been really a period where we've had really high farm cash incomes and high farm business profits.
And then at the same time, the Aussie dollar is pretty weak at the moment, around 64 US cents. Is that helping or hindering the farm sector?
Well, generally, it's good news for Australian agriculture producers. We export 70% of what we produce, and so the lower Australian dollar increases our competitiveness in international markets, and a number of our contracts are denominated in US dollars. And so that means higher returns in terms of high prices from those falling dollars, and also allows us to get access to markets which we might not have a competitive advantage in compared to some of the other producers. So generally it's an overall net positive, but at the same time, as we know, a number of our inputs are imported, and so the prices of those go up. But on balance, we generally look to falling Australian dollar to being a favourable indicator for sector performance.
Dr. Jared Greenville, Executive Director at ABARES, thanks for your time today.
Thanks very much for having me on.